Thank you, Beatrice. And welcome to BizAfrica. Here's what we have coming up for you tonight. The World Bank projects strong economic growth for Sub-Saharan Africa over the next 3 years. And farmers return to their farms in the Democratic Republic of Congo after the defeat of M23 rebels. Forecasting that the global economy will grow by 3.2% in 2014, by 3.4% in 2015, and by 3.5% in 2016. Just 5 years after the global financial crisis, we're seeing growth being driven by stabilizing high-income economies. According to the newly released Global Economic Prospects report, sustained growth in developing countries is being strengthened by faster growth in high-income countries and continued growth in China.
Developing countries we also see accelerating, not to the same degree, largely because they've already recovered from the crisis and they're already doing pretty well. The little bit of a cloud in the outlook is the taper, how that might affect developing countries. Our expectations is that's going to be a relatively smooth process. Indeed, what we see in the first few weeks of January is positive and encouraging news. Going forward, as interest rates tighten in high-income countries, we are going to see tighter conditions for developing countries, higher interest rates, and lower capital flows, but not so low as to disrupt growth in developing countries.
The World Bank is forecasting strong economic growth for Sub-Saharan Africa over the next 3 years, although the same cannot be said for North Africa. According to the latest Global Economic Prospects report, North Africa is expected to continue to follow behind Sub-Saharan economies. This is attributed to political instability and a lack of security. With more on this, our Washington correspondent, Daniel Renches.
Growth across Sub-Saharan Africa is expected to average 5.4% over the next 3 years, according to the World Bank, which says the region's success has been sustained throughout the global financial crisis.
Often we focus on, and with the international media, it's normal to do so, on the crisis in this country or the crisis in that country. But if you look at the aggregate statistics, the 2000s have been a period of unusual calm and peace in Sub-Saharan Africa, and that's part of the success story we see there.
That's encouraged a stable influx of foreign direct investment in areas like telecoms, transportation and consumer services, bringing much needed diversity to a continent traditionally reliant on extractive commodities.
Now, the trick is, and there's always this question, if it's a resource-based economy, do the benefits of those resources spill through to the rest of the economy? And in many cases, there can be difficulties in that regard, but one of the encouraging aspects of the African story is that we're seeing that the non-resource component of the economy is actually growing as well, and growing sometimes more rapidly than the resource sector itself.
The World Bank is more pessimistic about North Africa, where political instability in places like Libya, Egypt and Tunisia will continue inhibiting growth levels.
The underlying assumption that we make is that the process will remain uncertain, that there will be continued disruptions, that these will only very gradually start to resolve themselves towards 2016.
The World Bank says the decision by the US Federal Reserve to reduce its stimulative bond purchases will make South Africa's economy more vulnerable to investor outflows, along with other nations with larger debt levels, which may suffer because of higher interest rates. But overall, the World Bank concludes that solid investment activity across Sub-Saharan Africa will ensure the continent remains one of the prime engines of global growth, even as high-income economies return to more healthy levels. Daniel Renches, CCTV, Washington.
We move now to Egypt, where the Egyptian Stock Exchange witnessed its greatest increase in more than 3 years as the country took to the polls to decide on a new constitution. While official sources reported 11 deaths following clashes between Muslim Brotherhood supporters and police, investors still felt that the process was stable and pushed the market index to record levels. The index total increase was calculated at 2% on Tuesday, closing the day at 7,200 points. The Egyptian stock exchange has been fluctuating since December amid uncertainty and violence. It has, however, picked up since the 6th of January to reach a 3-year high. The market was little changed on Wednesday and closed at 7,198 points.
Investors were buying yesterday for several reasons. First, during the past 2 sessions before the referendum, investors were worried that the referendum might be disrupted or there may be lack of security. However, after seeing that the process was stable, investors felt secure about the coming phase and the current available shares. This is why there was a decision at the start of the session to buy shares.
On January 24th, 2011, we were at 6,690 points. Yesterday, the index was at 7,200 points. I believe that this number, or the strong increase in the index, which had not occurred in 3 years, shows that the traders are optimistic. There was strong buying in the market. I believe that this increase was due to the support from the banking sector, especially CIB that owns a large portion of the index. All this aided in the index increase. I predict that in the short term, we could reach 9,000 points, God willing.